Hello and welcome. I'm Walker Barrett, bringing to you today the second quarterly report for Sprouts Farmers Market, a health food store and grocery chain located throughout the United States of America. Sprouts Farmers Market recently had its IPO debut on the 1st of August, bringing in a 123% first day gain, the biggest gain in U.S. IPO history in the last 2 years. Stock prices rose from $18 to $40.11 by the closing bell of the New York Stock Exchange. This is absolutely incredible and a good indicator for what we're about to see in the second quarterly report for Sprouts Farmers Market. For the quarter, gross profit increased 43% to $187 million, resulting in a gross profit margin of 30.1% of sales, or a decrease of 30 basis points from the same period in 2012. Gross profit increased from 23% compared to pro forma gross profit in the same period in 2012, primarily driven by the increase in sales, and the gross profit margin increased by 10 basis points compared to the pro forma gross profit margin percentage for the same period in 2012. Increases in gross profit margin from the leverage in occupancy and buying costs were partially offset by the produce inflation and lower margins in the vitamin department due to temporary product markdowns in connection with merchandise alignment across Sprouts and former Henry's and Sunflower stores. Direct store expenses as a result of sales for the quarter decreased 90 basis points to 19.8%. Direct store expenses as a percentage of sales decreased to 50 basis points compared to pro forma direct store expenses in the second quarter of 2012, primarily due to leverage and labor costs, and also reflected a loss on disposal of assets primarily related to the sale leaseback of a store in 2012. Net income was $12.5 million for the second quarter in 2013, up $7.2 million from the same period in 2012, or an increase of 135%. Net income in the second quarter of 2013 included an $8.2 million pre-tax loss on extinguishment of debt and pre-tax store closure and exit costs of $0.9 million. Pro forma net income for the second quarter of 2012 included pre-tax acquisition and integration costs of $4.3 million, $1.3 million pre-tax loss on disposal of assets primarily related to the sale leaseback of a store, and pre-tax store closure and exit costs of $1.2 million. Excluding these items, adjusted net income increased to 51% to $18 million compared to pro forma adjusted net income of $11.9 million in the same period in 2012, just 1 year ago. Adjusted EBITDA, a good measurement for the profitability of a company, but that is often confused with the cash earning report, said that $52.7 million, up $11.3 million, or 27% from pro forma adjusted EBITDA for the same period in 2012. Adjusted diluted earnings per share was 14 cents, up 56% from pro forma adjusted diluted earnings per share from the same period in 2012. This increase was attributable to improved business performance from higher comparable store sales and resulting operating leverage and performance of new stores opened. President and CEO of Sprouts Farmers Market, Doug Sanders, said recently in regards to the second quarterly reports for his business, "We are pleased to report strong financial results in our initial quarterly release as a public company. Our robust momentum continued into the second quarter, resulting in strong top-line performance with pro forma comparable to store sales growth of 10.8%. New store sales continued to exceed our expectations as the Sprouts Farmers Market brand continues to attract health-conscious customers focused on value, paving the way for future success. I personally think that this is a great indicator of the future profitability that Sprouts Farmers Market will continue to have, and it will continue to reap the benefits of its unique business model and successful implementation throughout the country in the upcoming years." Thank you. This has been Walker Barrett with the second quarterly report for Sprouts Farmers Market.